Good morning, everybody. Welcome back to the Opportunistic Trader. It's about just past 10:45, and we're joined by Commodity Research Group's Andy Lebow. Andy, how are you?
I'm good, Michael. How are you doing?
I'm good. I'm good. You've been joining us recently and going over the recent DOE data after it's released. And today at about 10:30, we got the data, and oil's traded about 30 cents higher after the data. And I wanted to get your sense on what you saw in the numbers.
Well, I really didn't think it was worth 30 cents higher. I thought they were actually a little bit bearish. Crude stocks built by 2 million to 396. But where I thought it was bearish is that crude runs were down by 900,000 barrels a day. Now, crude runs is basically demand for crude, right? Crude run through refineries. So we're finally getting into turnarounds. And that number, I was looking for maybe 100 to 200 lower, as was the market. So that 900 is a pretty big number. And I'm surprised the market didn't sell off a little bit more on that. In the macro on crude, not all that many changes. Crude stocks are at 23 days supply, which is total total stocks divided by demand, and the 4-year average is 25. So we're right at that 2-day differential. The gas number, I thought that was bearish. Gasoline stocks rising by a million and a half. I thought they were going to draw. I think the market was looking for maybe a slight build this week. Gasoline demand after last week's big Florence surge was marked down, and gasoline in terms of day supply are running slightly ahead of normal. So again, we've been saying for weeks there's nothing all that great about gasoline. Distillate number was the one bullish number, drawing by 2.2. I thought it was going to draw by 0.2, and I think the market was looking for just around unchanged. Production of distillate was way down along with the runs. So that number is, if you had one number that was bullish, it was probably that. Cushing stocks built and total stocks built. So all in all, Michael, I didn't think this was a very impressive number.
Well, it's interesting you say not impressive number, but prices continue to be supported here. We're at 72.08 right now. When the numbers came out, we were 71.80, so we're still right on the highs of the year, or within a few cents basically, and so it's pretty supportive price action, despite what you're saying is not the most fundamentally supportive information.
Yeah, for this 1 week, and again, turnarounds is going to be a big deal because crude stocks, I've been saying every week they're going to build, they're going to build. Well, now that we're down at this number on crude runs, we are going to build
What
over the
about
next
were these
few
numbers
weeks.
any skewed at all still due to the hurricane from a few
Yeah,
weeks
a little
ago?
bit. I think a little bit on gasoline demand because that sort of spiked the 2 weeks before, and this week was a little bit soft. But gasoline demand has been, completely unimpressive this year, at least in the United States. We're running about unchanged. Um,
So you're
year
saying
year to
gasoline
year.
demand year over year is unchanged?
Yeah, it's
That's
not good at.
interesting. I was just speaking with Tony Greer before. We were talking about the lagging housing market a little bit, and now, gasoline demand. You're saying is, not that impressive, and that's interesting in what's supposed to be a very strong economy. That both of those aren't kind of reacting.
Yeah, we're not seeing it. Some of that is in response to pump prices are way higher than year ago numbers.
Well,
So
that's
that
true also.
that may be a factor. You see it more on the diesel demand has been running strong this year. Diesel demand is the one that may be slightly more correlated to um, to the economy, for trucking and for mining and manufacturing. And mining and manufacturing includes crude and natural gas production. So as we know, those have really been growing, and that's helped demand for diesel. All year diesel has looked a lot more bullish than gasoline. Although I have to tell you, I was pretty surprised that we've seen we had seen up until this week a 10 million barrel build on distillate stocks over the last 3 or 4 weeks, and the distillate has gone straight up. But of course, that's all in response to crude, which is trading more on Iran, I think, than
So
its
talk to me
own
about this.
domestic
Let's talk about
fundamental.
this. Let's talk about the spread between Brent and WTI. What do you see there, and is there a trade in either direction based off of what's happening?
Well, a few weeks ago we had liked Brent over WTI. Now I think that you have. I think there's still some more room for that to increase in favor of the Brent market, simply because I think WTI and Cushing, which increase this week. I think WTI stocks, are going to build pretty nicely here over the next few weeks. So I don't see that changing. And of course, we're going to lose more Iranian barrels over the next couple of months. We've lost 800,000 already, and I'm still sticking, Michael. I'm still sticking with 1112. I've seen 1.1 million barrels a day lost from Iran due to sanctions. I've seen some numbers being thrown out now at 1.5 million barrels a day. I don't have that. But nevertheless, it's a big loss. You don't want 1.2, and it's not going to be completely made up by the other OPEC or non-OPEC producers. Hence, we're looking at a tight fourth quarter, which we've been talking about probably since April. But now the market is really paying. Now the market's going, oh yeah, we are going to lose these barrels.
Yeah, well, that spread has definitely been heavily talked about, and I know you were bullish that spread, well in advance of when it was trading $10, and it's pretty dramatic levels versus over the past few years. So it's definitely something to keep an eye on.
Yeah, I wouldn't. I'd really be uncomfortable selling that spread here. Selling Brent and buying TI.
So you think it's going to
I think
continue to
it
stay
could
around
continue.
$10 and if not move
Yeah,
higher?
yeah. I mean, I think it has a chance to move higher. I just wouldn't. It wouldn't be the trade that I'd be all that anxious
What's Brent
about doing.
closer? What is a few catalysts, specifically on the Brent side? I guess on the spread, what are the catalysts that could really make the spread blow out to $15 or $20? Is it geopolitical or?
Yeah, it would be geopolitical. It would be certainly if we lost any Eastern Hemisphere crudes. I mean, if Libya went down, that spread could easily blow out. If Nigeria has any problems, that spread could blow out. I mean, alternatively, what could make it come in? Well, if Saudi says, all right, you know what, we're gonna add another 2, 3, 400,000 barrels a day, which they haven't said. That spread can come in. Remember, Brent, again, it's going to trade more on, to a certain extent, more on what's happening in Asia and the Eastern Hemisphere, as well, of course, as what's going to happen, what happens with refinery margins in the in the Northeast, and certainly the main catalyst is refinery margins in Europe, which are they're okay.
Yeah. What about natural gas? Any view there? We've had a decent pop.
Nah, it's not. Well, natural gas isn't really in my bailiwick, Michael. I'm strictly a dirty guy. I'm
There you
strictly
go.
petrol. I'm strictly a
I
petroleum
like that. You're not even going to try to
guy.
BS. You'll give it to
I'm
me
not
right
even.
away.
I'm not
Good.
even going to try to BS. I mean, yeah, like everybody else, I look at
I
it,
only brought it up because
very,
I thought you
very
might have it in the
tangentially.
repertoire a little bit, and it's actually had a pretty big move. We were talking to Bryn Kelly
Yeah,
about that, and Mark Fisher as well. And Bryn was talking about it. I think about a week ago, we were trading below 290, and she was looking at some October $3 calls that are going off today, trading at less than $1, and here we are. October is at 308, so that's been we've had a good move. We were trading down at 280 now. Here at 308, that's a very sizable move.
right, right. Yeah, I'm not sure I'd be married to the long side on natural gas. You still have some production there's still going to be growth in production. Some of that story, of course, is LNG exports to Mexico. Demand's been okay,
Hmm.
and we're heading into the winter with probably a little less inventory than we really need.
Yeah.
But
So
yeah,
we spoke with Ed yesterday of Commodity Research as well, your partner, and I know you guys are getting ready for your monthly report that you guys put out, really in-depth monthly commentary on all different commodities. What are you going to be talking about in the energy market?
well, probably a lot of the things we just talked about right here, but certainly, where the balances are. We'll be talking about what we're losing from Iran, what we think we're losing, and we're staying pretty strong on the 1-1 in terms of price action. We had I don't know if it was the last monthly or the monthly before, we were saying, well, we see Brent maybe getting up to 82. So here, got there. And then you say, oh man, now what? What is it going to do? Another leg up? Or, is that going to be that you've met your objective, and now what? So my feeling is that the market has already discounted an awful lot. It seemed like some of this leg up, or some of this rally was fostered by there was great talk at the APEC conference in Asia about crude going to $100, and coincidentally, the these $100 Brent calls were flying off the shelf.
Hmm.
I don't, right now that could happen, but it's going to take something else. It's going to take like another loss of production somewhere else, I think, for that to get to 100. I don't often, in fact, I hardly ever agree with Goldman Sachs, but they put out a note today saying they saw crude in like 70 to 80, or Brent in 70 to 80, and that's been basically the range. Got up to 82, so I'm sort of thinking we're really are at the upper end of the range, and something else has to happen.
Here's a
You know,
question for you, if you can help me out. How do I determine? Right now, I just filled up this morning. I paid 280 or 279. How is the price at the pump determined?
well, the price of the pump is going to be well. There's a number of factors. You're in Florida, right? Which is I don't know the taxes offhand, but a good portion of what we all pay at the pump, depending on the state, is going to be determined on what the taxes are. Now they don't change all that much from year to year, although they never seem to go down, do they,
Okay, so
Michael?
it's taxes, it's transportation, but
So
then
it's taxes, transportation. Obviously, the biggest cost is going to be the cost of crude. What's the refiners cost of crude? That's clearly the biggest. Clearly the biggest
so
cost.
but if I'm looking at, like, let's say Novi RBOB or something like that,
Or what low VR Bob is
205 right now.
205. So for let's say just for New Jersey, the pump prices here are they're in the 290s, let's say 295. So that's 86 cents of taxes and transportation and
So, but it's
marketing.
basically
Whatever marketing costs. But if you look at
so, but
we
transportation's
have to
pretty
look. We have to
steady. Transportation's pretty
yeah,
steady,
the,
and
the
taxes are
biggest
pretty steady. So it's
right.
really RBOB plus transportation plus taxes.
Basically, yeah. And the RBOB is going to be, that's going to be cost of crude, which is that's the biggest variable cost. If you think about it, that has the biggest impact on where the price of gasoline is. And, then there's other, market. So then you've got to also look at the supply and demand in the particular market that you're in for gasoline. Sometimes supplies can get really tight depending on refinery performance, pipelines, etc. So there certainly can be some variability from market to market. But your main cost is crude.
Yeah. Any closing thoughts?
I think first of all on WTI the high, I think we're at maybe contract highs. The high for the year is 75.27, which was over the summer when Libya went down and we really began to the market really freaked out for good reason. So let's see if we can get above that. I think WTI does have to get above that to get this thing a leg up. I don't see it, Michael. I just don't see it right now. Looking at the inventory projections for the next couple of weeks. Not that I'd come in here and sell it outright other than hedging,
You'd
but
give a more neutral right here.
yeah, I think I'd be more neutral. I think that the shape of the curve may soften because inventory should begin to build. I think some of these and some of these spreads are beginning to soften. It's interesting how Dees Red Dees or red, what is it, red Dees blue Dees, is that 1920? I always get the colors mixed up.
Sure.
But Dees 19, Dees 20, that's been okay, but neither one of them has really exploded because even with the hedging action in the back of the curve, and I think that those are gonna continue to struggle. But yeah, I guess more neutral here than anything else.
Okay. All right. Well, thank you, Andy Lebow of Commodity Research Group. Thanks for the insight, the data analysis after the DOE report. We appreciate the information.
Okay. Thank you, Michael.
All right. Thanks, Andy Lebow. We'll talk to you soon.